You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, April Fool's Day. First day of April, 2019. Hope you had a great weekend. Hope you had a chance to spend some quality time with the family. I saw you. No, actually, I didn't see you yesterday. Long story, but we'll see you next Sunday. How about that? All right, I got a chart up of the S&P 500 Emini Futures. Now, if you're returning, welcome back. If you're here for the first time, a special welcome to you. If you can't see this chart I'm talking about, go to our homepage at cfrn.net. On the right-hand side, click that big microphone, follow the instructions. You'll be registered in 30 seconds. You get an email reminder each day that shows about the start. You can join with one-click access. Now, if you're away from the office, away from the desk, just working off a cell phone, go to youtube.com/CFRN/live. There you'll catch a live in real-time simulcast of the daily show each and every day, thanks to the good folks at YouTube. Thanks, YouTube. All right, this chart I'm talking about, S&P 500 Emini Futures. This is a 30-minute chart. We had a price channel going on last week, as you can see. Broke out to the upside. We were just kind of spiking the top of the channel. We closed Friday with a little doji. That thing opened at 28.39.50 and it closed 30 minutes later at 28.39.50, and that was it for the week. Last night we opened at 28.44.50, also known as a gap higher open. What do we know about gaps? We know that gaps on the indices, on futures, almost always close. Gap lower opens have closed 100% of the time since the inception of the markets. That's how the market got this high. But see, this is a gap higher open, and while they typically close Sunday night, if we get a Sunday night Globex open gap, if not Sunday night, usually Monday morning. And here we are rolling into Monday afternoon, and we're still riding high. Now, it looks like, well, all you had to do was be long off the open and just ride it to glory. It's a beautiful observation after the fact, but take a look at this. That's today. This is a daily chart now. This is the most recent swing high over here. So we get a price on that, 28.66. Today is high, 28.64.50. So are we struggling with the resistance up here? Well, struggle, consolidate, whatever you want to call it. Is it going to break out to new highs? It's had the whole session. It had Globex, got it close, gapped over an area that could have been good resistance. See, 28.43/44. Those are weekly trading zones from last week. So on the gap, price just gapped right over it, and it did not race to the upside by any stretch. It just kind of wound its way up. Perhaps we would call this a melt up, to borrow a phrase. Hey, Mike Reed, if you're out there listening, need to hear from you, give me a call. Borrowed that phrase from Mike. And so here we are moving sideways. What changes this? Well, at some point, price is going to come back to fill this gap. Could it run away and not come back for years? Possible, but I don't foresee it. In my narrative, it's not the next high probability thing to happen. The high probability thing to happen is for price to come back and fill that gap. Once it does, it'll meet up here with the BBC along the way, and then the high probability thing will be to go back up and challenge this high again, which will make a triple top. Will it continue to move higher there? I don't know. We'll see. But we'll always point you towards what in our wheelhouse appears to be the next high probability thing. And our rules are pretty simple. Our methodology, pretty simple. Designed that way to make it simple. It's never going to be easy. Trading's not easy, but it can be simple. So we had the gap on the S&P, we had the gap on the Dow. The Russell, we had a little gap. And these are all zones from last week that you're seeing on the chart. We can say that the zones from last week on the Russell did a pretty good job of embracing what the Russell has done so far. NQ had a gap there. Looks kind of just like the S&P. Crude broke out above this weekly trading zone from last week, and one more zone overhead from last week. I don't have on the chart. It's up at 62.75. And gold, well, there's gold. Gold did make a run this morning. Managed to get up to 1301.70. Now it's pulling back into the zone from last week at 93.94. Let's take a look at the numbers from around the world, the cash markets, and see where we stand on this Monday. Starting here in the U.S. The Dow is up 238 points, again, cash market. NASDAQ up 64, S&P 500 up 22, Russell 2000 up 10. The commodity basket, crude oil up $1.05, trading 61.19 last. That's almost 2%. Gold down $2.80, trading 12.95.70 last. In the Asian markets, at the close, the Nikkei posted a gain of 303 points, 1.5%. Shanghai was up 80 points, which for the Shanghai is 2.5%. And the Hang Seng added 510, which is almost 2% for the Hang Seng. In European markets, the FTSE up 38, the DAX up 155, that's over 1%, and the CAC up 55, also over 1%. A green day in Asia, a green day in Europe, and a green day here in the US of A. There you have it. Those are the numbers. Let's go to Michael, get a recap of what happened in the live training room today. Michael, if you're ready.
Okay, I am ready. I am ready. And it was a slow day.
Slow sideways roll. What do we got for news coming up this week? Let me take a look.
Let me check here.
This week. Okay.
This week. Tomorrow. Tomorrow we have core durable goods, total vehicle sales. Wednesday, ADP non-farm employment change. So we do have some big news coming up. The first week of the month you usually have some big news. And we have ISM non-manufacturing PMI and final services PMI. Thursday, Challenger job cuts, unemployment claims, natural gas. Oh, I forgot to mention crude inventories on Wednesday.
Right.
And Friday we have
non-farm payrolls. Yeah.
Yep. And unemployment rate and consumer credit. So we do have some big news coming this week. Sadly, today was just going sideways almost all day. I was happy to get the goal early on though. And
here, let me pass it off to you, and you can show everybody.
Okay, I think I have it, don't I? Let me see. Yeah, I do. I got it.
Okay.
All right.
Drag it up, and there we go. All right. It's all yours.
All right, here we go. Good afternoon, everybody. Today is Monday, the first day of April, 2019. It's the first day of April, 2019. Okay. If you have not taken a free trial with us, go to the homepage here at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you will be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, you will not get a free trial. All right? We don't know you took the free trial until you click on that link. Now let me just go check who all is in here. Okay. Spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the first day of April 2019. We made 6 ticks in crude, 5 ticks in gold. That put us at plus 110 on the morning. Today it took 44 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 4 today. So it's the first day of the month. We're up 110. On the year now, we're at $6,562. That's over 56 days, averaging 117 per day. 117 per day. Okay. All right. On gold, right here this morning, we picked up 5 ticks. There was one more down here that we missed, and then it just got choppy and sideways. And I mean, even during the break, right now, it may be given a shorting opportunity right here if it pulls back, because we have bearish separation down here in the slingshot. You know, what we want to see is the cycle red and below the green line for a short trade, and see it pull back. Now this bar right here broke dynamic support right in there. By pulling away from it, below it, it broke dynamic support. Okay. Now over here on the euro, we didn't do anything this morning with the euro. It just started out really choppy like this. Gave one short right there. Didn't go anywhere. And all this chop, look at that. That's just awful. During the break, though, it gave a shorting opportunity right there. And, you know, I don't know, though, because the low of the day might have been right here. I think it would have given a shorting opportunity right in here. And that was it, really. And crude oil. On crude, started out with a break even over here. We didn't do this because it didn't break dynamic resistance yet. And then we didn't do anything in here because it was going into the high of the day. Once it came off the high of the day, and it gave a shorting opportunity right here. We picked up 5 ticks there. That's where we got the goal for the day. And 1 tick over here to give us +6 on the crude. Then again, it got really choppy. It made a run, it pulled back, and it dragged the cycle down. Okay, so we didn't take this close above the trend line here because it dragged the cycle down. And it's good because that would have stopped us out. And then it continued chopping all the way through the end of the morning session. Then look, it gave like a big whipsaw. Okay. No trades during the break on crude. We ended with +6 on crude. All right. And the ES, well, let's back the ES out because it's got a lot of bars, but not a lot of movement. All right. Let me highlight this weekly trading zone. The ES started out right here going down toward the zone. So there was no trading in here, and then it just consolidated for the first half hour. Then it started to move up. But up here, this is what the trend line would have looked like. Okay, it actually would have been more like this. Yeah, like that. So there was no trading in here because it would have been a momentum trade going into resistance. Then it pulled back down toward the zone again and just consolidated and consolidated and consolidated. And we didn't have any trade opportunities this morning. Not in the morning session. And, you know, I really want to see it get out of this range that it's in. You know, if you look at it on a larger time frame, like I like the 15-minute, Dwayne likes the 30-minute. But if you look at it on a larger time frame, it's just been messy and in a range. Now, we did have news events today, but it didn't have any effect on it. And that was our morning session. So let me bring this back up. Okay. So Today is the first day of April 2019. We made 6 ticks on crude, 5 ticks on gold. That gave us $110 per contract. Today took 44 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 4 trades today. On the month now, we're up $110. That's over 1 day, averaging $110 per day. Last month, though, let's go up to last month. So, last month, we were up $2,353 over 19 days, averaging $123 per day. Okay. On the year now, $6,562. That's over 56 days, averaging $117 per day. Okay. And if you have not taken a free trial with us, go to the homepage at CFRN.net. And right over here in the right-hand column, it says apply.cfrn.net. If you click on that, you will be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. So you must click that confirmation link. Oops, wait, I'm sorry. You click on that, you're going to be brought to this page where all we ask for is your email, your first name, how you found us. Hit the submit button. Then you get the confirmation link. Oops. And that's it. And that is it. Now, gold right now, starting to set up a shorting opportunity. We have broken dynamic support. Cycle is red and below the green line. The MA1 is red and below the BBC. So there's possibly an opportunity coming up for a short on the gold. Okay. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking the South Mountain, America's largest city park. Studio A, where Dwayne is currently residing, I think.
That is a fact. Yep.
Yes.
All right. Okay. Recap of the recap.
Today, it took 3 trades and 44 minutes to get to $100 per contract.
Very good.
Yeah.
That's a good bingo.
Per contract.
Okie doke. John should be here pretty soon.
Not yet.
No, he's not here yet, but he's on his
I'll keep
way
an eye
down.
out.
Yeah.
Okay.
Okay, we'll go over the Concierge Trade Alerts from last night. And anybody that wants to grab a screenshot, hang on. Gotta resize this thing. There we go. And here you go. If you want to grab a screenshot, grab it and go. 5, 4, 3, 2, 1. Got it? Good. Alright. Here we go. Consider being long at or above 28.56, which is right here. These went out last night at 6:20 p.m. Eastern, 20 minutes after this gap higher open. Long 28.56. And above it and below it. Important prices, important areas are almost always tested. This is a fine example of that. Swing high right here is 28.60, so that's a 4-point move. Back below the trigger, up we go again. This time we make it to 61.50, so 61.25. So a 5-point move. Back below the trigger, up we go again. This time it runs 3.5, back below the trigger, and then up we go again. Important prices, important areas, almost always tested. All right. Now we'll take a look at the Dow. And just to point something out here, I know Michael mentioned to you that if you haven't taken the trial in the live training room, just go to apply.cfrn.net. If you don't get your confirmation email us support@cfrn.net. Let us know, or call 949-42-EMINI, 949-42-EMINI. You'll have an opportunity to download a demo platform and download and use our indicators for a full week. It could be helpful if you look at it like this. Here we go. We had a bullish cross back on, this was as we came down and began to build this price channel to the upside. Had a bullish cross March 28th, which was not Friday, that was Thursday, 4 a.m. Eastern on Thursday. We had a, remember we were trending down, a bearish cross, leg, retracement, leg, retracement, leg, and we could not put in a lower low. When that happens, stand by for a potential bullish cross. So we get a leg and a retracement, a leg and a retracement, a leg and a retracement. Taking us into Friday, taking us into Sunday night. You'll notice there has not been a bearish cross since Thursday morning at 4 a.m. Now, we have one rule that says as long as price is above the BBC, which is the green line, and that just simply stands for bull bear cross. And I think you get my drift. When price is below, we're bearish for whatever time frame we happen to be observing. This is a 30-minute. We anticipate lower prices. So once price got below the BBC, did we get lower prices? We certainly did. And when price gets above, we expect higher prices. And did we in fact get higher prices? Well, the bullish cross took place at 28.05, and we just tagged 28.65. Missed it by 2 ticks. 60 points since the bullish cross. Again, not easy, but simple. That's a very simple rule. If yes.
Oh, nothing.
Oh, I thought you were going to make a comment.
No, it's a very simple rule, but following the very simple rule.
It's very simple. It's very simple. I mean, this is oversimplification. This is a historical chart. Easy to say that now, but I mean, if you went long at the bullish cross and you stayed with it, which you could do if your rule said, well, I'm going to stay with this until I get a bearish cross. You wouldn't believe your good fortune, would you? But that same dynamic, as you'll notice, happens over and over and over. This anomaly back here, the 20th, was that the, what was that day? Was that Fed announcement? Is that what that was? Yeah, I think it was.
Let me go check.
I think it was. Bullish cross, price gets above the BBC, higher prices. Bearish cross, price gets below, lower prices. Yeah, that's Sunday night a week ago.
Yeah, it was Fed announcement.
Yeah, that's what the, and then after that big pop, we popped even higher the next day. But price did get above the BBC. There was a bullish cross, and then there was a bearish cross. So the bullish cross over here, 28.25 up to 28.60. Bearish cross over here, 28.50 down to, what did we hit? 27.92. Called 27.90. 60-point move. Are they always that big? No. But when the market is trending, that's when you have an opportunity for high probability opportunities. When the market's not trending, not so much. So this market will continue to move higher until price gets below the BBC. And once it does, then price will move lower. This will move higher until it cannot put in a higher high. Just like over here, as price was trending down into this price channel right here. So we had a leg and a retracement, and a leg and a retracement, and a leg. And this leg could not put in a lower low. So the market has run into something, price has run into something here, a force greater than itself, and it's no longer the ask, it's the bid. Because the bid turns that thing right around, and up we go. And there we sit. All right, the Dow. Last night, considering long above 26,170. And that's going to be right here. And we put in a high up at 206. That's a 30-point move for the Dow. Here's the Russell. Last night, consider being long above 1556. Right about here. More like here. More like here. 56. That's 56. So we run up, right up to the trigger, pull back, run up again, pull back. Finally get to a little bit higher ground. 1560/61, a zone from last week. And it sends it right back down to the zone below at 1549/50. In Q. Concierge Trade Alert last night, consider being long at or above 74.70. Which will cut right across here. And this looks an awful lot like the S&P. We popped up to 87. That's 17 NQ points. Back to the trigger. I don't think we really got below it there. Got below it here. And then this thing just got choppy. But important prices, important areas, almost always tested. And does that mean it can happen like this? It can lay out this way? Absolutely. You better believe it. Okay. Crude. Consider long at or above 60.50. Which is right here. There we go, 60.50. So 60.50, we run up to all of 60.65, back below the trigger, up to last week's zone. Put in a high up at 60.87. Back to the zone now, or not to the zone, but back to the alert, 60.50. Back to the trigger. Up we go again. This one did not get below it, because the alert was again 60.50. Now this low got back to 46. This low only came to 51, and this low only came to 51. Does that happen? You're looking at it. It sure does. Gold. Let's take a look. Last week's zones and last night's Globex open. Down to the zone. A little consolidation. Made a run. Put in a swing high here. And we had a Concierge Trade Alert at long above 1300. And we only put in a nominal higher high. Well, 1301.70. So at $10 a tick for gold, that's $170 per contract. But you don't know this is the swing high till after the fact. No one does. Not man, not indicator, not oscillator. Where's price drifting back to? Right here. Now, that dynamic that I showed you on the ES, if I showed it to you on the Dow, it would look a little something like this. And if we back up, let's try to read a text message and do this at the same time. Now, if we go back into March 28th, you see on the Dow, we have a very different picture than we had on the S&P. Price trades above and below, and above and below, and above and below, and above and below. Now look down here. You've got this red and crossing here, and as this turns up, finally this catches up with it, and this is what lifts the Dow's boat and takes it into. Now, there was a head fake right here. It looked like it was going to give you a bearish cross, but it didn't. And then after the gap higher open last night, price pulled back to the BBC, bounced, pulled back, and bounced. Remember, the pullback holds more often than it doesn't. Okay, here it is on the Russell. Same thing. This big head fake here. Price pulled back to this zone. We did get a bearish cross, so we had a leg, a retracement, a leg, lower low, and then on this retracement, it didn't hold. Pulled right up through it. Then when it pulled back here, it held, and it held, and it held, and it held, and it is holding. Will it continue to hold? You have to watch it and see. At some point it won't, and then we'll start to retrace a good portion of this move, not only on this market but on every market. From this swing low, which is significant, if we grab our fib tool, we can pull some fibs right up to there. 24% retracement from the high, from this low to this high, puts us right back at this weekly zone from last week. A little deeper retracement, 38% retracement, brings us back to here, and a good 50% retracement takes us to here. We are trading at the upper ends of the weekly trading zones for this week already. It's only Monday, which tells me the market may be getting a little bit ahead of itself. So between now and we get those unemployment numbers on Thursday, I believe
it's the ADP non-farm on Thursday, right? I think
there's employment numbers, there's non-farm payrolls.
Yeah, I think it's on Friday. We have the non-farm unemployment change, and the unemployment rate is on Friday.
Yeah, so if those numbers are good, we may rally back up to these highs. But I think these highs are a little bit. We've got resistance here. The market hasn't shown any signs of really pulling back since the gap opened. But again, that gap sits below us.
I think what it's going to make for is a great opportunity for everybody next weekend. On Sunday nights. Put the stuff out on Sunday night because you'll have that information, and whatever you put out on Sunday night is going to be like gold. That's what I think.
Good. I think John's wheeling his way in here now. He's still not in yet, but he'll be here in a minute. Okay, what have we've looked at? What happened to that? How did I do that? I erased. When I opened that, it erased everything I had on it. Well, that's not good. All right.
That's bad news.
Yeah.
And there's no Control Z either, is there?
No, there's no Control
Undo
Z.
Is there an undo? I don't think
No,
there is.
there's no undo either. Oh wait, there we go. There we go. I found it. I just needed to scrunch it. I think it was 2 weeks ago or so. I had pointed out these areas that price would potentially come back to, and we came back to this area so far. This area is still down here, 27.30. Very easily price could go back there. This is on a 1 hour. Let's see if they'll show up if I put it on daily. Probably not. Not so much. You can see it better on the smaller time frame. Alright guys, if you have any questions, put them in the chat box. John's going to be in here in a minute. I've walked you through the Concierge Trade Alerts. We didn't do anything else on Logic last night except for the gap fills. I think there might have been a Crude in there. And we won't do anything until this market resolves what's going to happen. Now, are we of the mind that it can't go higher? No, not at all. But up against this resistance, it's not a high probability venture to go long into a previous high, because once price got here, look what happened. It slapped it down. We had this high, I said earlier, was 66, and then price pulled all the way back down to 27. Low 27.8950, and now we're up against that with a gap below. Yep. Nothing you can really do here, nothing that's high probability. Could you take trades? Could you go to some smaller time frame and could you just eke it out, you know, with each little move higher? You can. But again, that's not in our wheelhouse or in our narrative what the high probability opportunity is. So we're going to stay away from that. And that means learning to sit on your hands. Being a trader doesn't always mean being in a trade. In fact, kind of like deer hunting. You don't pull the trigger, usually on most deer hunts, so I'm told. I'm not a deer hunter, but you pull the trigger once if the opportunity presents itself. And I guess sometimes if you get really frustrated towards the end of the hunt, you might go shooting cans just so you get to pull the trigger a few times, and I suppose that's okay. But you get my drift. And so as you think about this thing of, okay, I'm going to become a trader, so I'll just sit down in front of the chart anytime I want, and I'll just take a trade. And when I want to make money, I'll just make it. I'll make the market, you know, hand me over money. Well, you know, that's sort of a brute force approach. Learning to recognize the high probability and participating in that, moving and flowing with the market, that will work better for you. All right, John, you keep telling me you're on the way in. If you're coming, come on.
Yeah, but he's not there.
Yeah.
He is not there.
I'm looking at the thing. All right, let's figure it out. There he is.
There he is. There he is. Okay, I'll open up his mic. Your mic, however, is not going well. Hey, John.
Hello.
Hey, John. Welcome to the show.
Okay. Dwayne's back too. Okay, good. Everybody's back.
How are you?
Hello.
Hey, welcome to the show. John, you can't hear us? So I have to call him again.
Well, I can hear you.
Yeah, I can hear him.
And I can hear John. John can't hear us,
Hello?
apparently. There he goes. You hear us, John?
Hello.
Hey,
John?
John. I
Hello.
can hear you. I'm not sure why you can't hear us.
Hello. Hello.
Yeah, we can hear you.
Well, you could. I kind of hear you. Oh, I know what it is.
Okay. All right, little volume issue, but he's got it working now.
Who is it?
Okay.
All right, John.
All right.
Just 1 second, please.
All right. Okay. We can't hear John. And
No, he said he'd be back in a minute.
oh, okay. All right. I didn't know if your mic was on or off.
Yeah, mine's on.
Okay.
I'm just waiting on
That's
him.
good. That's good. Okay.
Lyft is trading below its IPO price. Second day of trading.
What price did I put? What?
$78, maybe. That's what it was.
You know, I don't know if Lyft. You know, I know Uber has done a whole bunch of things. You know, like I've had a whole bunch of ideas of different different things, like for Uber, like Uber boats and Uber, you know, different kinds of Uber things
Right.
that you can do. And
Yeah, they got Uber shopping and Uber food
yeah,
delivery.
they got Uber
all kinds of
food.
stuff.
Yeah, Lyft. I don't know if Lyft's got all that yet.
No, I don't think so. I haven't heard it. I haven't seen it. But I don't all that Uber. I don't think Uber's actually behind all the other stuff. I think other people are just.
You jumping on the Uber bandwagon?
I think so. I could be wrong.
Well, just a thought.
These charts are not loading well.
Your charts?
The one I have up here.
Ew. Oh, okay, those charts. Yeah, because you're going to be going through all those with John.
Yeah. Not happening. We have some internet connectivity issues. Perhaps. What kind of internet speed I got here? If it's breaking down. No, that's where it should be. So it's not that. $150. That's what I pay for, so
Really?
that's what I'm getting.
Really? I haven't even checked mine in a long time, but I know I need improvement. Let me check mine. By Uka. I hit go. And you know it's bad when it's taking forever to go.
Alright, here's the lift. It popped right up. So
Actually,
it IPO'd at 78, ran up to 88-ish.
my download is 212. And upload is be right about 11, it looks like.
This thing, it's 2 days of trading. It's $18 off the high.
Wow. people were taking profits. You know, it's probably a bunch of retail people that are, you know, they got in on the IPO and then they just sold it off. I don't know, what's the volume?
I don't know. I've never figured out the volume indicator on this thing.
Oh, okay.
It's not as simple as it is with DT Pro.
11.45 upload, 212 download.
All right, guys. Looks like John's not going to make it today. I thought he was, but I got work to do. So I'm going to bid you all adieu after the good word for the day, which I have here on tap. Stand by.
Okay. I'll mute John so he doesn't interrupt the good word for the day.
Oh, no, he won't if he hears it. You know, I don't think. Or, go ahead. That's fine.
Okay.
Okay, everybody's familiar with this scripture, but we all have different ways of reconciling it. Romans 8:28, and we know that in all things God works for the good of those who love him and are called according to his purpose. Typically when you're facing some kind of a tragedy, you've lost a loved one, people like to hand that one to you, and it's almost offensive when you're in that place of grief when somebody says, well, you know, there's a greater good and a greater purpose here. You know, they're in a better place. Yeah, well, I don't, you know, I'm grieving. I'm looking at a box. You know, just be careful with that. Be gentle. Not to take away from what the verse is trying to convey. Paul begins this verse by saying, "And we know." Do we? Do we know? There's so many things in life that we don't know. We don't know if the economy will dip or how our kids will turn out. We don't even know what we ought to pray for. Romans 8:26. But we can know these four things. Number one, God works. Even though you can't see him. He's busy behind the scenes. He hasn't checked out or moved on. He's ceaseless, tireless, and he never stops working. Number two, God works for the good. That's what it says in the scripture. God works for the good. Now, it doesn't say he works for our comfort or our pleasure, our entertainment, our good humor, but for our ultimate good. But then again, he is the ultimate good, so should we expect anything less? Number three, God works for the good of those who love him. Behold the benefit of a loving God. Make his story your story, and then your story takes on a happy ending. That's guaranteed. And number four, God works in all things. God works not just in a few things, or the good things, or the best things, or the easy things. He works in all things. And he doesn't make the plan up as he goes along. See, he has a plan. Do you have a plan? Do I have a plan? And if we do, hopefully we do, does it match up with his plan? Because that's a good plan. When your plan matches the plan of the man who created you. The Bible says, in him we were also chosen, according to the plan of him who works out everything in conformity with the purpose of his will. Not my will, not your will, but his will. Ephesians 1:11. And the best part is, God's plan includes you. So stop fretting, stressing out, and losing sleep. Turn it over to God and believe that he's working all things out for your good and for his glory. That's our good word for the day. Hey, John.
Hi.
Welcome to the
show.
show.
Hi. Sorry about that. Sorry, just a couple of things showed up at just as I was coming on. I didn't foresee.
That's right.
obviously today, this market is amazing. I mean, there must be just, I don't know. Maybe we're seeing what I was talking about months ago, or even weeks to months ago, when the thing that people don't get about this entire bull market is the amount of stimulus that's been put in, you know, for the whole decade. In other words, the momentum, the economic momentum, powered now or supplemented or enhanced by the recovery of the stock market momentum, along with the stimulus that's still going on around the world, and with the Fed kind of changing their whole approach to dovish and stimulus, probably, and who knows, maybe doing a lot of stimulus as well, is creating the conditions we're seeing right in front of us right now, which are just staggering. And, you know, this being one of the strongest quarters ever. And here we are, April the 1st. I mean, 9 times out of 10, the next quarter is going to be, you know, at 50% of this one at a minimum, and possibly 150 or 200% of this one, or 300%. You can't rule it out. Could really happen. So the question is, I mean, this is an unusual April the 1st because we're, you know, and another thing that I should point out is that there is a habit when we're in a kind of a really bull kind of a bullish kind of a, you know, scenario like what we appear to be in right now, is there's a tendency for the March to morph into April in a normal year. And if April's strong, there's a tendency to morph into May as well. And if we do that this year, you know, without too much of a pullback, we start hitting new highs at some point, you know, going into the middle of May, we could have the mother of all summer rallies, and this thing could go way, way higher, you know, substantially higher. So it appears as if, I mean, look, you've got a pretty good reference point today. You've got a gap, a break, you know, upside potential breakaway gap here. And if it keeps powering on, you know, another thing is we're 2866. We're only 150 points, 140 points from from 3,000, and there's a sort of magnetic pull now towards 3,000, and we just, you know, we're back over 26,000 on the Dow, and we're having a, you know, incredible day on the Dow. And you know, unfortunately, one of the features of a late run is the Dow starts to outperform the you know, the Nasdaq and everything else. So that's something to keep in mind as well. I noticed earlier on today the mid cap pulled back a bit, kind of decelerated. It's not, you know, it's not the strongest. I mean, right now we've got a double top on the Nasdaq. We've got a lower high on the Russell. And we're up on, you know, we're making new highs on the S&P and the Dow. So and by the way, the semiconductors are roaring again today, but they're not making new highs yet. You know, they're a little bit low, less, you know, they're not outperforming the Dow and the S&P today yet, at least. So I noticed another thing: the transports are very strong, and I think when the last time we looked at the advanced decline line on your chart, it looked like a double top, but I looked at it yesterday, and the advanced decline line is you know, has been making new highs for a number of weeks actually, and that's incredibly bullish whenever that happens. So that you know, and look, you know, the worst case scenario is you know, normally when the advanced decline line is hitting new highs, you know, sometimes it takes 2 years for a recession to hit under those conditions. I think the worst case scenario has been about a year. In other words, when the advanced decline line starts failing, you're usually about a year away from a recession. So, you know, all of whatever the stimulus has been going on with the Fed, whatever they've been doing to help these markets, you know, to help the economy back up, the odds of it kind of, you know, contributing and continuing to contribute for quite a number of quarters to come appears to be, right on. And when you hear Kudlow and Stephen Moore, who was on over the weekend, who's going to be joining the Fed board, talk about 4 or 5 years of growth still to come. I don't think personally we're going to make 4 or 5 years. I think we're going to get about 3 more years of this, into the 21, 22. But I think after 22, we're going to run into trouble. So look, if he's saying 5 years, 3 years is a pretty good bet. And obviously, if we do keep going that long, we're going to have a record, all-time record economic boom, unlike anything before, probably about 12 years of duration, 11, 12 years. And, essentially still one of the biggest bull markets ever. But, these corrections, I mean, in a way, that last correction was kind of borderline whether it ended a bull market or not. Same thing happened in 2011, 2012, and same thing happened in 2016. These corrections,
pullbacks,
they kind of restart the bull right, in a big way, as we've already said. When you get these incredibly negative numbers in sentiment, it's sort of, it's like reloading the gun. You got a lot of bullets left, and we certainly, this recovery has just been astonishing, and it tells you how, we're in a mega bull market of monumental proportions, because when you just take what is the advanced decline telling you? It's telling you that the breadth of the market is phenomenal. The breadth of the market is leading the indices, essentially. It is. Look at the index. We're looking at an index right now. 500 stocks, and the body of the market, if you like, the underbelly of the market is already making new highs. That's a simple fact. And whenever that happens, it's just hugely bullish. And then you've got this big spike, in possibly one of the most incredible V bottoms of all time in this market. Just looking at us right there. And look, we're probably going to get some sort of a consolidation, but each pullback appears to have been bought. Every single pullback on this ascent has been bought. It's potentially a 1-2, 1-2, 1-2 type situation. If we suddenly lunge into a third wave, possibly into the summer here, and break through 3,000, you can see how much more this market could go. Into the summer, and into possibly even into the fall. But think about this. What's so good about that is it's going to be about a year. If we're sitting, if we're north of 3,000 and 3,300, something like that, and maybe we're at 32,000, 35,000 on the Dow, and we finish the year somewhere north of 3,000 and 30,000 in both these measures, it probably tells you that November of 2020 is going to be in very optimal economic conditions, not unlike, and possibly a 3-4% growth, not unlike what we saw in 2018 rather. So it certainly looks very, looks better and better given where we're going. Now, we are making a sort of a little double top there. So we have to be a little bit careful. And obviously, if today's low gets reached with this gap, and that gap gets filled and starts to go down, I think you want to rethink the bullish case, or start to rethink the bullish case, because in spite of the great performance up to date, things can change. We'll have to just take it day by day. But certainly this has been a very impressive continuation here after a pullback, which tested that little breakout as well, which you're pointing out just right there.
It's right here, John. We'll come back. This is what I think is the high probability. Then we'll come back, close that gap, and then we potentially find support I mean, resistance, support. And then at 2,800, we should catch it, 2,800 area, we catch another bounce. Then the question becomes, do we become a triple top, or do we take it out, hold it on a pullback, and then go to challenge this over here? So I think we see the gap filled. If not in today's session, tonight, tomorrow.
Yeah, it
We're
could. I
trading
mean,
at
look.
the upper end of our weekly ranges. We actually have we've got one more zone overhead that could come into play, and it very well may by the end of the week. We've got some big news towards the end of the week. We've got employment numbers, non-farm payroll, a couple other things coming towards the end of the week.
Yeah. The jobs number might be a of course, if the jobs number comes back on track, that could be very, very positive. So just one sec.
You need to get that? Go ahead.
Yeah.
Because I need to run. Okay.
Okay. If you need to run, Dwayne, I'm here.
No, that's all right. I'm just going to wrap it up. I got it.
Okay.
All right. Guys, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.